Good morning, everyone. Let's take a quick look at the latest developments across key financial markets, starting with the US dollar index. On Monday, during the Asian session, the US dollar saw a slight rebound after 4 days of decline, settling around 98.6. The recent weakness is largely tied to several key factors, including the ongoing US government shutdown, renewed trade tensions, and speculation about an upcoming Federal Reserve rate cut. These factors have significantly impacted investor sentiment, and last week's volatility in the foreign exchange markets have highlighted how sensitive currencies can be to geopolitical risks. What's particularly interesting is that the US dollar, typically seen as a safe haven asset, is now under pressure. The re-emergence of global trade disputes, especially between US and China, have reversed that perception. So this week, all eyes are on a potential meeting between President Trump and China's President Xi Jinping. If their discussions ease tensions, the dollar could find some support again. But if expectations of a rate cut continue to grow, the dollar may remain under pressure. Technically, the dollar index has slipped below key short-term moving averages, showing a bearish trend. It's holding just above the psychological support level of 98. There's a slight chance of a rebound, but unless it climbs back above the 98.75 to 98.83 range, the overall trend remains negative. Moving on to crude oil. US prices are hovering around $56.95 per barrel. Recently, oil hit its lowest level since early May, influenced by forecasts from the International Energy Agency predicting a growing supply surplus. Adding to the pressure, US oil inventories rose more than expected last week and production hit a record high. These supply concerns, combined with weaker global demand due to trade tensions, have kept oil prices under pressure. However, in the short term, oil prices are still influenced by market sentiment and geopolitical developments. The daily chart shows that oil is in a consolidation phase. If it manages to break above $58 or $58.65, we could see renewed upward trend momentum. On the flip side, a drop below $56.15 could lead to possible further losses, possibly testing the support level of $54.78. Okay, so turning to gold. Prices jumped over 2% on Monday, trading above $4,381 an ounce, a new all-time high. This surge is being driven by continued demand for safe haven assets, especially amid fears of further rate cuts by the Fed and uncertainty surrounding the US government shutdown. And on top of that, US-China trade relations. So gold has been one of the year's top performing assets, up more than 60% in 2025 so far. Despite occasional pullbacks, the broader trend for gold remains strongly bullish. Technical indicators suggest that any short-term dips are likely to attract buyers. Key support levels here lie between 4,200 and 4,219, while resistance sits just above 4,400. A break above this could pave the way for further upward trend momentum to 500 in the medium term. Lastly, let's look at the Australian dollar, which has been gaining in strength recently. This is largely thanks to China's central bank keeping its loan prime rate steady. Since China is a major trading partner with Australia, any economic stability in China tends to support the Aussie dollar. Additional optimism around the upcoming talks between Australia's Prime Minister Anthony Albanese and President Trump have lifted sentiment also. The discussions are expected to focus on critical minerals and defence cooperation, particularly under the AUKUS agreement. Despite these positive developments, the Australian dollar remains technically in a downward trend. It's still moving in a descending channel, and its relative strength index remains below 50, which is a bearish momentum sign. Key support lies around the 64-cent mark, while resistance sits near 65.72. A move above these levels could help shift the outlook to a more bullish stance in the short to medium term. In summary, markets remain heavily influenced by geopolitical developments, central bank signals, and technical patterns. As we head into another trading week, keep an eye on the upcoming US-China and US-Russia talks, as they could prove pivotal in shaping market direction across currencies, commodities, and safe haven assets. Thanks for your time.